Mike, give me the first word that comes to mind that's slang for money.
Cheese.
Cheese, cheddar, stacks, bling. What about Kabbage? Well, today we're talking about Kabbage, which is a now massive lending platform for small businesses. And just to give you the kind of the quick background on Kabbage, Kabbage started by financing eBay-based small businesses. So the problem, and this is really everywhere globally, but equally in America, everyone knows that most businesses in the country are small businesses. There are plenty of people who have side hustles that they're trying to turn into businesses. And what is the number one reason why companies fail? Well, aside from not getting users and not getting paid, if you're an existing business who's actually making some type of profit, the thing that kills businesses is their cash flow. Maybe there's payments they can't make on time. Maybe they're not getting paid for 30 or 60 days from their clients. And so Kabbage really stepped in, starting on the really small end of the spectrum. So rather than people who are able to go into the bank and get some big line of credit, Kabbage took this innovative approach by starting small. Like I said, with financing even eBay-based small businesses. And their magic and their secret sauce was very much about taking those people seriously, seeing these upstart small businesses with some type of regular cash flow as something that could turn into something bigger. So now today they've funded over 150,000 small businesses since their inception. They've really shifted the market, in my opinion, on the entire user experience of what it means to take out a loan from your bank. I think they've made a massive change to that. They've used data to empower their customers, and they really are underwriting thousands of small businesses every day in a simple user experience that really anybody can do from even their phone. I read that 15% of their customers are taking out loans from Kabbage from their mobile phone, which I think is incredible. So thanks to Kabbage, small businesses now have access to capital just by sharing their data, and they get improved really, really quick. And I think they're solving a big issue. So let's break down the product and how it works.
So there's two main features that we're going to cover today. The bulk of their business comes through these lines of credit. So we'll go through the lines of credit. We'll go over what is secured debt versus unsecured debt, because I think that's important to introduce. We're going to go over the fees for their platform, and then a new feature that I've never seen before, and actually doing some research, was pretty interested in this invoice payment features that they're using to kind of speed up the collections for your business. So to dive into the line of credit features, they do lines of credit up to $250,000. They say you can qualify in as little as 10 minutes. And once you draw on that line of credit, they give you flexible terms on paying those back. You can choose 6, 12, or 18 months to pay those back, which is pretty cool. Getting into secured versus unsecured debt. And this is important, I think, as a business owner who is you're considering taking funds, it's important to realize like what kind of collateral am I putting up against this loan, and that's the key determining factor for what's unsecured and what's secured. So secured means it's secured by collateral. So it could be your house, it could be future sales, it could be your inventory. Kabbage does not require collateral, which I thought was a good thing for a potential borrower. So once you take a draw from your line of credit, basically, let's say you applied for a line of credit, they gave you $100,000, and today you needed to draw $10,000. Whether you're doing it on the phone, on your app, mobile app, or you're doing it on the web, you're going to select then, do I want to pay it over 6, 12, or 18 months? And right then and there, you'll see all the fees associated with that. And let's say, you're taking a $10,000 draw, your fees are going to be $750 over the course of that 6, 12, or 18 months. And it's very transparent exactly what you're going to pay in fees. And I think that's kind of a breakaway from what I've seen on the other end, either in traditional financing or like lease financing for different equipment and things like that. It's often very hard to figure out what you're actually going to pay for. So I like that they're transparent in that. And yeah, that's how the line of credit and the working capital works. The feature that I'm most excited about, and have been thinking through different ways that some of my clients could use this last feature called Invoice Payments. And basically, if you have a client who is struggling to make payments against your invoices, you can basically send them an invite to borrow money from Kabbage. And, I have some clients who have some old accounts receivable that, 90, 120 days old. It would be nice to be able to say, hey, look, if you're struggling to pay this, here's a link, sign up for a Kabbage account. In 10 minutes, you can get funded and you can get paid. So I really like that. It's actually one of the first applications of that thought process and that I've seen. And I'm thinking through if that could be applicable to some of my clients.
So what are the downsides? I mean, I know like lending and obviously borrowing, there's fees, and you've sort of broken that down, but what to you would be a risk, or is there anything here with Kabbage that you're feeling like is overzealous in terms of maybe someone's ability? Maybe it's too easy to get a loan. Maybe it's too easy to just tap a button and suddenly get another 10K in credit. Do you see any type of negative aspects that people should be thinking about?
I don't have any red flags or anything I would be alerted against for Kabbage specifically, but in general, I deal with this a lot. I actually have a couple clients who have used specifically Kabbage, and I think the big thing I would be thinking through if you're thinking about creating a line of credit for your business is, are you doing this because something is broken in your business, meaning the mechanics of your business, you're not charging enough, you just have too much overhead? Are the mechanics of your business broken and that's why you're running at a deficit? Or do you have a specific initiative that you need to invest this money into? I think that could be in a broader sense, an acceptable way to do this. Personally, I wouldn't recommend it, but I think you just need to think through, is this a Band-Aid on a problem that isn't going to be fixed, or is it like an investment in the business?
Yeah.
And the other piece that I would think through is the best time to look for a working capital line of credit for your business is when you don't need it. But I would assume that that's often the opposite case that these guys deal with.
Right. It's very last minute. People are sort of rushing. I think that's a great distinction to bring up, that the reason for taking out capital should be not that the business is fundamentally broken, but it should be sort of floating you through a process that is going to take you to the next level that you can obviously repay. My personal sort of bias here is that I think sometimes debt financing can be a net negative for the business, because I think a lot of times people are missing some of those problems that are actually occurring. But when it's like accounts receivable, totally, I think that makes a ton of sense. Now, for me, I think the interesting sort of trend that we're seeing here is really the rise of a few things. One, as we continue to explore these different fintech products, we're seeing user experience drastically shift in the market. So whereas before it was very costly, time intensive, you had to meet with bankers, you had to sit down, it's like almost like a bias to who's going to approve you for credit or not. Basically, Kabbage removed all that. So they do it in minutes, and it's actually based on data and sort of inputs and algorithms instead of by sort of personal preference almost in some ways. So I think that's really fascinating that they saw a huge opportunity in the market to make the user experience very seamless. Even from your phone, you can apply and get a small business loan. Now, where that heads in the future, I think continues to get more interesting. So no doubt Kabbage is investing heavily into AI and machine learning. And the reason is really twofold. The first thing is so they can make better predictions about who to lend to in a more seamless manner. What data do they need from customers that prove out loans that work well over time? And maybe they'll make some mistakes and be undercapitalized. They just raised about 700 million to make sure that they could probably cover some of that stuff, because they're probably still learning who is the right customer to lend to, who is not. And I think that's really interesting. Now, the second piece that I think comes from the machine learning and data aspect is not only does it let them seamlessly approve loans, but it also lets them work with their clients and their customers like partners instead of adversaries. And what I mean by that is, if Kabbage is the type of company that can pull in data in aggregate from thousands of other small businesses, they can then become predictive and assist small businesses in timing their loans, in picking sort of quantities for loans, in giving data that might be valuable for them to run their businesses on. So I actually see possibly a future where banking, some of the competition in banking begins to be a bit more like a relationship between, I guess, a bank and its customer that is a very net positive in terms of almost even strategy, because they have access to data that a small business on their own wouldn't have. So I wouldn't be surprised in the future if not only can you get approved in 6 minutes for a loan, but if you get nudged by Kabbage in advance about a loan you're going to need to take out in 3 months because they know based on your cash flow and your data that you might need to do that. And the last thing I'll mention is that I did see a venture capital firm who's also writing checks in a similar manner, but they're actually sucking up data from their potential portfolio companies' channels outside of banking. So not only are they seeing their income statements, but they're also looking at social channels. And potentially a bank can enter other spaces of data beyond just this opaque bank account to think about funding and giving loans. So very fascinating topic, but I'd say the big idea here is machine learning will drive a lot of this adoption in the future.
So the predictive nature of that's pretty cool. It's also a little bit scary that they have all of that information and they're using it in ways that a user probably wouldn't think that they're intending to. But if it results in lower fees and easier access to capital, it's probably a trade-off they're willing to make.
Yeah. So I think there's probably still a ton of room to grow. I'm curious how some of their loans will work out or not work out, and what they'll learn from that. But this isn't something that we can invest in or not. So obviously I'm not going to invest. I personally am not thinking about using Kabbage. It sounds like you're thinking about using Kabbage potentially for some of your customers based on that one feature. Anything else you want to share before we hop off here?
No, I think this is a good spot.
Awesome. All right. Well, thanks for tuning in, and we'll be back again soon. See ya.
Later.